Bitcoin ETFs, a new era of accessibility. The world of finance is on the brink of a potential revolution. The U.S. Securities and Exchange Commission, or SEC, is nearing a decision that could reshape the landscape of cryptocurrency investing. This decision revolves around the approval of a Bitcoin exchange-traded fund, or ETF, a move eagerly anticipated by institutional investors and crypto enthusiasts alike. The implications are vast, potentially driving Bitcoin's price to new heights and further bridging the gap between traditional finance and the digital asset market. The buzz surrounding Bitcoin ETFs is palpable. Investors are closely watching, eager to capitalize on the potential opportunities this new financial instrument presents. But beyond the hype lies a fundamental question. Will Bitcoin ETFs truly be the game changer many believe them to be? To grasp the potential impact of Bitcoin ETFs, it's crucial to understand what they are and why they matter. In essence, a Bitcoin ETF is an investment vehicle that tracks the price of Bitcoin. This allows investors to gain exposure to Bitcoin's price movements without directly owning or managing the underlying asset. This is a significant departure from the current landscape, where investing in Bitcoin often requires navigating complex and potentially risky cryptocurrency exchanges. The significance of Bitcoin ETFs lies in their accessibility and familiarity. ETFs are a well-established investment tool in traditional markets, offering investors a regulated and convenient way to diversify their portfolios. The introduction of Bitcoin ETFs would bring the same level of accessibility and regulatory oversight to the crypto market, potentially attracting a wave of new investors who were previously hesitant to enter the space. The approval of a Bitcoin ETF is widely expected to have a profound impact on the cryptocurrency market, particularly on the price of Bitcoin. The influx of institutional capital, eager to gain exposure to this emerging asset class, is likely to drive up demand for Bitcoin, potentially pushing its price to new all-time highs. Analysts and market experts are closely monitoring the situation, with some predicting that Bitcoin could reach $100,000 or more in the aftermath of an ETF approval. Beyond price movements, Bitcoin ETFs are poised to accelerate the mainstream adoption of cryptocurrencies. As institutional investors enter the market, they bring with them their established infrastructure, expertise, and regulatory compliance, further legitimizing Bitcoin as an asset class and paving the way for broader acceptance. Section 4: Key Players and Emerging Trends in the Bitcoin ETF Landscape. The race to launch the first Bitcoin ETF is a hotly contested one, with major financial institutions vying for a piece of the pie. BlackRock, the world's largest asset manager, has emerged as a key player in this space, signaling its intent to offer a Bitcoin ETF pending regulatory approval. Other industry giants, such as Fidelity and VanEck, are also in the running, highlighting the growing institutional interest in Bitcoin. These established players bring a wealth of experience and regulatory compliance to the table, further bolstering the credibility and attractiveness of Bitcoin ETFs. Beyond individual players, the emergence of Bitcoin ETFs is also indicative of a larger trend: the convergence of traditional finance and the cryptocurrency market. As more institutional investors recognize the potential of digital assets, we can expect to see further integration and innovation in this space, blurring the lines between these once distinct financial realms. Section 5: Navigating the Future: Price Predictions and Potential Risks. While the potential of Bitcoin ETFs is undeniable, it's essential to approach this new frontier with a balanced perspective. While some experts predict Bitcoin's price to skyrocket past $100,000, others caution against excessive optimism, highlighting the possibility of a sell-the-news event where the market experiences a short-term dip after an initial surge. The reality is that predicting market movements with certainty is impossible, and investors should be prepared for volatility regardless of the SEC's decision. As the world awaits the SEC's verdict on Bitcoin ETFs, one thing is certain: the future of finance is being written in real time. Whether this new chapter ushers in an era of unprecedented growth or presents unforeseen challenges remains to be seen. What's crucial is that investors stay informed, approach the market with a healthy dose of caution, and remain adaptable in the face of constant evolution.